Alright, I am going to make a video on how I anticipated, predicted, whatever word you want to use, how I knew that price was going to go over here to my green box. Now these are the two charts right here. These are the two charts I set on Discord. This is when price was still up here. And obviously we tapped my area where I was expecting. I even mentioned in the Discord the exact levels I was focused on. Now I want to kind of break this down because it's kind of important towards swing trading, maybe even help with day trading. I wouldn't say this is really a necessity in day trading's arsenal, but the more you know, the better, right? This could help. It just depends on how you use it. But I'm going to show you guys how I anticipated how price was going to get here, specifically to this area. And I'm going to explain to you the markups behind all this because obviously I marked up this entire chart to figure out price was going to go here. So first of all, we're going to start by a 3-day time frame. Oops. So obviously we can see that price already fell down pretty significantly into that red box, right? So when we're trading, I've made a video on this. It's about the 3 Ws, and I'm going to try to make this video really quick, but it goes back towards the 3 Ws. It talks about market structure. We're looking at liquidity, market structure, the smart money versus retail concept. And really the 3 Ws I think is really important here because in order to understand where price will go, you have to understand you have to understand where price was, and where it is, right? So with that in mind, let's first break down this chart, okay? So in order to know the direction of price, you also have to understand what price was doing before price got here, right? So roughly around here, price was at 97. Over here, price was around 80,000, right? That's the bottom, this is the top. So in order to understand where it's going next, you have to understand all the information to the left side, which means everything from here to here. Oops, that's way too big. Everything from this side, pretty much. From this low, here, let me make this better. Pretty much from point A to point B. Everything from here to here is going to help you understand where price is going to go and why price went here, okay? So first of all, one of the things I was looking at was the price action over here. So I can clearly see that price was ranging for some time, right? To me, after a big move like this is actually very bearish or very, this is the time to be cautious, right? When price was over here reaching all these all-time highs and, price was trying to break 130,000. The reason why is if you actually look at the price action starting from over here in August to April, you'll see right here that price was, it was already trending up, right? It was trending up, and then it had these pullbacks, corrections before it made a move up again, and then something similar from December to April. December to April, this is during the tariffs. You can see the same thing happen from over here from March to September, where price just had a correction, pullback, okay, and then price then breaks down in the same direction, okay. So in this case, you had a lot of bull flags, okay, but over here going into 2025, you can see that price then starts to slow down a bit, right? It starts to go sideways. Now, depending on how you look at this, you might see it as price doing this or price doing this, right? It might be something like this. And what I mean by that is like right here, you can also see that, let me see, where's my trend line? Right here, that price was trending in this direction right here, right? Now in this scenario, you're forming what I call a triple divergence, which we'll put triple D for that. That's pretty much what I have on this chart. This is the chart I sent on Discord, by the way, okay? So here you have a triple divergence where price kept making highs, right? It just kept making higher lows or higher highs, and on the indicator it was making lower highs. You can see right here, high, lower high, lower high, right? So already by October, by the time price was making all-time highs, you should already be kind of cautious about entering positions. You should actually, in fact, maybe consider getting out of the market, right? So in this scenario, we have the bearish divergence, right? This is not just a double divergence or double top. This is a triple divergence. Of course, my headset starts to die, so I don't know if you guys can still hear me. Hopefully you can. Anyways, price right here forms this high, forms another high, and then another high before breaking down, right? So how do you look at this? From over here, we were macro bullish. Starting from May to October, we started showing signs of, the trend starting to get weaker, which then shows you it's time to start being cautious. That's showing you that the trend is actually might in fact be reversing and reversing back down, right? So if that's the case here, you have this triple bearish divergence that then breaks down, right? You could also call this a rising wedge pattern if you guys know what that is. Rising wedge that breaks down, okay? So triple divergence, rising wedge pattern, and then confirmed breakout, okay? You have a lot of, and then, the RSI itself is overbought and overextended. You're no longer ranging downwards, you're not pulling back, you're just ranging up, but slowing down, right? So after this breakdown, so let me get this clear before I actually start. So in market structure, what's really important is the highs and lows, and which highs created which low, which lows created which high, okay? Which low created which high created which low. I think I said that right. Anyways, so here, in fact, we'll have this low, right? This low created this high right here, or relatively speaking, this high right here, okay, this all-time high. So this low created this high. This high right here created this low. This low created this high. So if you look at it, it's kind of like this: low, high, high, and then now we're switching from bullish, to bearish, right? Now, looking at that, so we already have this bias that we're bearish, right? Starting from 80,000. Now, if you look at this, okay, this is where price established a bottom around 80,000. Okay, now this is then going to be referred as our liquidity, which I think everyone by now already understands the concept behind it. Well, really, it's not just about identifying liquidity; it's about understanding the structure behind it and why price wants to target that liquidity. Because in fact, you can say there's liquidity up here, right? I mean, you could say that, you know, there's a lot of highs right here that did not get taken out, and maybe price wants to reverse, take them out, and then come down. You could say anything, right? Liquidity is of such a broad concept and term if you know if you're not applying it properly. So here we have this low acting as liquidity, right? And then you have this. Actually, Mag said this in the Discord. It's pretty much a bearish flag, a bearish pattern, and essentially what that is price. It's a continuation pattern. So what I mean by continuation is here the price is trending up and it starts to trend down, making lower lows, lower highs, and then it starts to retrace back up, forming this bearish flag, and then continue in the same direction of that trend. So I don't know if that makes sense. So I'm gonna draw it out really quickly. So when the price is trending down, it'll start to pull back just a little bit, just to trap more traders before continuing down. Same thing if the price was bullish, price goes up, pulls back, and then continues in the same direction. That's actually what you see over here, right? Price goes up, price goes back down, continues in the same direction. This is a bull flag. Okay, this would be a bear flag. So there's so many cautions, a lot of red flags, a lot of reasons to be concerned around 97,000 or even anywhere in this range. Okay, and then also in this chart, I sent this was one in the Discord. You can see I drew this range or this box with with the word deviation, essentially saying that look, price didn't actually break out. It didn't give you any breakup structure. All it did was it just went above this range, acting as a deviation before dropping back down. Right. But anyways, deviation, bear flag, whatever you want to call it. There's a lot of red flags here. Okay, here you also have another divergence where price makes a higher high. The indicator right here makes a lower high, so that's another red flag around 97,000. Okay, so that's already confirming the bias of price wanting to go lower. So if we actually go back to that, let's go back to around, all right, so this is around January 13 to January 16, this week right here. You should already be in a position of getting out of position because you already understand the fact you're forming a divergence, you're forming a bearish flag after breaking down of a, you know, of a macro bullish trend. So this is actually just giving you last minute opportunities to exit the market. Okay, so I'm gonna delete this because you guys know it's a red flag. It's a bear flag. Okay, now not to mention right here you have these lows acting as liquidity. Right, these are lows that have not been swept. Okay, so if you have a bearish divergence, what does that mean? So in this scenario, the buyers were in control of price, right? The buyers are in control of price, and then eventually you have this bearish flag showing you that the trend is weakening. What does that mean? That means buyers are now losing control of price, which now means that sellers might take control of price. So if sellers are going to take control of price at this 97,000 area, sellers taking control of price, that means price is going to want to come back down because now people are selling, sellers are in control, right? Which means they're going to be targeting this opposing liquidity down here at 83 and 80,000. So if you actually look at my Discord, I was very specific. If we close below 83,700, I told you guys it was going to go to 75,900 or slightly below that level, right? So here, this whole point of this video is I'm trying to show you guys how to identify these levels, right? And then not only identifying the levels, but you know, just helping you understand the structure and the analysis behind it, because this is some deep analysis. I mean, as a day trader, you might not be doing this much analysis because, you know, it's a day trade. You're not going to be in position for that long. But this one, you know, once you get really good at this is not really that much work, just because it's going to be like muscle memory. Your mind sees it right away, and you don't have to say it out loud. You're not teaching it, you know. So anyways, this bearish divergence is already a red flag, so it's going to target the opposing liquidity. Why? Because now with sellers in control price, they need to take out all these people that were buying, right? So now you have this understanding that price is already going to go here. Now it's a matter of where is it going to go next. We already know it's going to sweep this level, most likely going to sweep this level because of the fact that it's bearish. Now how do we identify where it's going to go? So if we go back to my chart, my box was around 78 to 75, which it should have been 74, but I'm just going to draw the box. I'm going to show you guys how you could have made this better. Okay, so this was essentially my chart. Now, how did I get the number 75,900 on the Discord, right? So the way I did that was, I'm going to delete this because I think you guys already understand this. But once you understand everything here, you understand what's happening right now, right, and where it's likely going to go next. So going back and let's go back in time really quickly. So you already understand where price was, where it is, and where it wants to go. You know it wants to go down. You know where it was. Now you need to understand where the buyers were, or where the buyers are at, because that's where the liquidity is. That's where the actual liquidity, not just this one, not just this one. This is just liquidity from, you know, from price going down here. Obviously, we already know that. But what if price wanted to go here, here, here? You know, it wants to go down here, down here, down here. How do we know? That's what I'm going to teach you guys. So, you know price. So I'm going to repeat myself. I'm repeating myself so you guys really, truly understand this. We know where price was. We know where price is. We know where price wants to go. Okay, that's the 3 W's. Now, the way to know where price wants, so you know it wants to go down, right? So now we want to know where is it going to go down to, right? Which means you have to analyze this. This is all you need, okay? Now, obviously, some people are going to go down here and be like, Ray, look, there's a gap here. Look, Ray, there's an order block here. But guess what? That's not relevant until we break this level right here. I'm going to explain to you. Remember, this is a macro trend. So price establishes a high here, establishes a low, and then establishes an all-time high. So during this entire time period, price kept going up, up, and up, right? So a lot of people were buying here, a lot of stop losses. A lot of stop losses are here, a lot of buyers are here. We have not been here in a very long time. If you look at what a range looks like, just look at this. ranges is that price goes there, comes back down, and goes back up. If you zoom out, has the price even gone to this area yet? Maybe if you like draw your boxes like this, you could say like, yeah, that went there once, which means that this level is still significant, and this level could, it could do this before going down. That's what I'm trying to say, is we haven't touched this area yet, so that's why this area is where you're focusing on. You're not focusing down here. Okay, so we're focusing on this circle. Okay, now specifically we're focusing on the circle because, oops, going back to this time frame, we're trying to figure out where price wants to sweep below. So this is the lowest point. Remember, because this is a downtrend, we already expect price to sweep this level and to create a new lower low. Okay, so this is going to dive into a little bit of market structure and liquidity. So if you guys remember, I know you guys aren't, most of you should know this, but price is forming higher lows. Price then forms lower highs, right? Oops. And then there's going to be times where the market starts to range, right? Where is liquidity? Liquidity is right here. Liquidity is right here. Liquidity is on both sides. Okay, so remember what I said. We know where price was. We know where price is. We know where price wants to go. We know it wants to go down. Right now it's in a bear flag that's breaking down. And before that, it had a bearish, it had a breakdown essentially. It had a triple divergence and a confirmed breakout to confirm this downtrend. Now, essentially, now that we're bearish, now that sellers are in control price, we now want to take over, or we want to take out the people that were in the market previously, right? Now, you can't just go ahead and say random numbers and say like, oh yeah, we're going to take out these people right here at 49,000. That makes no sense, right? We're going to focus on this area, once again, this area. And what are we going to use? This 3 drawings that I drew. So I'm going to ask you guys a question. I mean, it's up to you guys how you want to see this, but right here, this particular circle, so I'm going to remove this circle. Do we have an uptrend, a downtrend, or a range in this circle? We have an uptrend, right? So if you have an uptrend, that means the liquidity is on the bottom. Okay, so let's break that down even further. Let's go back to it. Okay, this is not the time for the internet to lag. Okay, cool. So the best way to understand this is to use the path tool. Okay, so this is the area we're gonna focus on. Let's make that a little darker. So the path tool, right? We have a high that's established, a low, a high, a low, a high, and a low. I don't know if you guys can see that. It might be a little confusing because you're not used to this, because you might be thinking like, oh, this is a low, high, low, high, low. No, if you go down to a lower time frame, to a low enough time frame, let's go even the 1 hour time frame, right here, you'll actually see you can actually make this better. So let's actually do this a little better. Right here, price established a high, a low, high, higher low, high. Oh, oops, I forgot what this higher low, and then breakout. Right. So what does that mean? Liquidity is right here, starting from 74 all the way to around 77. Right. So this is liquidity. Now remember, if this is liquidity, so I'm going to draw a green box from this box to right here, make this green. Let's go ahead and go in a higher time frame and extend this box. Has price tapped this area yet since April? So it's been almost, it's been more than 8 months since price has been at this area. So the likelihood of price reacting here is very high, because this is where a lot of buyers were previously, and this is where a lot of stop losses are at. And this low right here, this low right here is acting as liquidity. So when we sweep this level into, so listen, we're sweeping this level into a demand zone, an area of liquidity, an area where a lot of buyers are at, and a lot of buyers were previously. And this is where stop losses are also placed, because people don't want to lose money. So this zone right here, the reason why on Discord I said this is a crucial level to hold is because this is a macro level, so demand zone. This is where a lot of stop losses and buyers are at, and this is also a level that we haven't been at for a very long time, right? If we had broken this level, then the likelihood of going to 68 and 68,000, like I mentioned this word, was going to be very likely. But I personally expected price to start holding this level just because we haven't gone here in a very long time. Okay, so that's how I got the level. Is I go back in time. Okay, I apply the concept of liquidity and market structure, and I like to use the path tool to help me find where people are buying. So how do I know that? So I'm gonna delete this once again because, like I said, I'm just trying to show you guys how I do it. How did I know people are buying here? Because look, price established a high, established a low. When it establishes a low, that means people bought here. You see the reaction from 75 to 77, 78. People started buying at this low, and then as soon as it went back down to around 75 again, it immediately shot up. Do you not see this impulsive candle? Right. So if that's the case, that means there's a lot of buyers at this level, right? And specifically, I chose the lows. Look at this. I'm zooming in. Hopefully you guys understand. Low, low, low. This is liquidity. Liquidity is where price is drawn to, and when price sweeps into it, price likely reverses in the opposite direction, which means if price were to come back here, you would expect price to reverse back up because it triggers all the stop losses, a lot of orders get filled, a lot of buyers step in, price goes back up. Okay? Hopefully that makes sense. This video is going to take long again, but I don't want the video to be too long, but I mean, kind of has to sometimes, right? Hopefully it makes sense. Let me know